The LA fires have so far cost billions of dollars in damages, displaced tens of thousands of people, and killed over 24 people. Yet, insurance companies seemingly knew this would happen over 1 year ago. Climate-related disaster is not a new concept, and wildfires in California, everybody expects those, but nobody expected them to be this close to Los Angeles or this severe. Well, nobody except the insurance companies. So let's back up a little bit and re-examine why they pulled out 1 year ago and why insurance companies are pulling out of a multitude of areas across the United States for similar climate change related reasons. First, you have to understand what insurance companies are about, what their business is. Their business is risk management. They have a pool of people who are paying them for insurance, and they need to manage risk so that their business doesn't end if one area is subject to a disaster. And the way that they do this is by spreading risk out across a wide area. Insurance companies utilize a multitude of sources to inform their risk decision making, but one of those is CAT modeling. CAT is just a short version of catastrophe modeling. And these models have to be very accurate because insurance companies depend on them for staying around. Because insurance companies are strongly incentivized to know what the risks will be and when/if they will strike, they have some of the best prediction models out of, well, anyone. Let's take Allstate as a perfect example. They had over 70,000 policies which were pulled in 2023. And they did this because from a risk perspective, it didn't make sense to insure them. They were going to lose money on them. To them, as well as many other scientists who were familiar with this subject, it was only a matter of time before a devastating and extremely destructive fire swept through Southern California. They didn't want to stick around for the financial strain or potential insolvency. Or let's take Florida, another great example of insurance companies literally either not being able to provide coverage because they keep going out of business, or not agreeing to start to begin with because they're going to lose money. In 2022, Hurricane Ian struck the state of Florida. It cost the state over $110 billion in damages. This is the kind of damage that many private insurers literally cannot sustain. Insurers also predict that Category 4 and 5 hurricanes are going to become more frequent and more intense. And Florida is also going to become increasingly vulnerable to these strikes and increasingly vulnerable to sea level rise. Coastal properties from Tampa to Miami are going to become unaffordable because insurance premiums are going to be so freaking high. A new law was also recently passed, which states that if you have a property that's worth $500,000 or more, insurance is mandatory for you. So how are people going to afford a home? A grave warning sign for 2022's Hurricane Ian was only 2 years before, when Allstate canceled issuing new homeowners insurance. Also, notably, they majorly scaled back what they covered in places that are at risk of storm surges or flooding. In Florida's case, this has mainly caused people to join the Citizens Property Insurance Plan, which has a whole host of its own problems. So, all right. California and Florida, two rather quote-unquote obvious cases for insurers pulling out. I mean, the risk seems just too great, right? But where are the new and up-and-coming places where insurers are increasingly pulling out, possibly indicating imminent disaster in these locations? Well, one of these major new ones is Texas. Texas is really hard to insure for a whole host of reasons. Number one, in the north, part of it is located in Tornado Alley. Tornadoes, do I even need to say it? Obviously dangerous and destructive. But Texas also has a very long coastline on the Gulf of Mexico. The Gulf of Mexico is already very vulnerable to hurricanes and flooding, and that's only going to become more true as the years tick by. And that's actually a perfect segue into many other parts of Tornado Alley, which are going to become increasingly unattractive for insurers. These states include Kansas, Nebraska, Oklahoma, Texas, as mentioned before, mainly any of the states located in the flat center of the US. Insurance companies predict that in spring and fall, EF4 and EF5 level tornadoes are going to become more intense and more frequent. So I wouldn't move to any of these states if you can avoid it. The final up-and-coming region to look out for in terms of if you're an insurance company looking to not lose money are Washington and Oregon. This is the Pacific Northwest. You could also lump Montana, Idaho, and maybe some other states in there too, but it's not really necessary. Basically, anywhere that is becoming increasingly vulnerable to wildfires. Washington State and parts of northern Idaho have already experienced devastating wildfires at an increasing rate over the last 10 to 15 to even 20 years. If we're going to go back and create a chronology of all of this, we should look at the state of Louisiana. Louisiana is a nightmare if you're trying to get insurance coverage. Non-private insurance providers need to charge 10% more so as not to compete with the private market in the state. As a result, Louisiana has increased rates for residual plans as of 2023 by over 60%. This means that the average premium is over $4,000. Louisiana is both very vulnerable to tornadoes in the northern part of the state and also flooding and hurricanes in the southern part of the state. Hurricane Katrina comes to mind. This is not going to be a rare event, according to insurance providers. Looking at the future, past, and now the present as well, we can see that insurance providers have been right time and again about what the disaster will be and around when it will strike. You can judge them by when they pull out of your area. It's kind of a cliche to say that the government isn't good at anything, but the government certainly isn't as good at creating accurate models for risk as insurance companies are. That's just a fact. And if the wider public were to leverage these insurance catastrophe prediction models to a greater effect, it's possible that we will not only be prepared for the next inevitable catastrophe, but that people might move to a place that won't have that catastrophe happen as well. This brings me to the final part of the video, the speculation part of the video. Moving for climate-related reasons sounds a little bit hokey pokey at this time, but that's becoming harder and harder to understand as well. So where are people increasingly moving to for climate-related reasons? Well, there are several sub-regions which are becoming more attractive from an insurance perspective, but the most notable large region that is pretty safe from climate-related disaster is the Great Lakes area. Insurers tend to see states like Indiana, Ohio, Wisconsin as pretty safe from climate-related disasters. That is to exclude the parts of those states that are potentially vulnerable to tornadoes being part of Tornado Alley. In all, we may look back on the current California wildfires as a paradigm shift, a moment where people change their thinking about climate-related moving. It remains to be seen. What is known is that insurance companies have been right time and again about what the disasters will be and where. And we would do well to heed their advice. I mean, nobody else seems to do as good of a job, and if they're not going to look out for us by covering our house, maybe we should just read their prediction models. I mean, what else can you do?